how to survive and thrive in volatility. Again, my name is Don Kaufman. You are watching a TheoTrade presentation. Quick risk disclosures. We are not financial advisors nor a broker-dealer. I'm going to give you a bunch of different examples tonight. That copyright disclaimer, this is ours. This is not yours. If you ever need to get a hold of me after this evening, and this is important to me, okay, you know that you can email me anytime, support@theotrade.com. All you have to do is put Don in the subject line, okay? We use a common inbox, and we do this basically to be able to triage different emails that come in. So, again, we're located right here in North Scottsdale, if you guys are ever in the area. Let's just jump right into it tonight. Listen, this is why you're here. You know, one of the most important things, and I'm going to talk about the market as a whole here in a moment, but one of the more important things is that you leave here tonight and you have tangible, usable information, right? First thing we're going to learn tonight, why volatility, it's all about risk. It equals risk, okay, in the marketplace, and how you can handle, all right, you know, that volatility, really increase success in the markets. Number two, what works in volatile markets so you can profit from volatility. Number three, discover how to build some trades with very limited risk. What kind of maximizing returns you're actually going to see. And I felt one of the best ways to put this together this evening is to actually show you some of my own positions, specifically throughout the last couple of trading sessions. And number four over here, and we're going to talk about this early on, what is implied volatility and how you can use it to increase your chance of success. So these are going to be some major topics tonight. Listen, I think you guys are going to be shocked how much we're going to go through inside of the next hour. Speaking of the next hour, okay, everybody, if you're tuned in this evening, stay with me until the absolute bitter end, because we are actually going to provide you an indicator that I use just constantly, and I'm nuts about this. I am not a big chart individual. I know a lot of people out there, they're into technicals and so forth. I am what they often term a quantitative trader. So this happens to be a very quantitative indicator for your charts. It's cumulative ticks, and it provides a running tabulation of the NYSE tick, okay? And it can really provide leading edge insight towards shift in market direction. With the cumulative ticks, we're also going to give you the quad indicator. It's $297. And I'm telling you right now, okay, this indicator is, again, on my screen all day, every single day. We will provide a link for you to this particular indicator. By the way, this is what it looks like. If you're kind of curious about the indicator itself, the quad indicator is right here. It actually shows this is New York Stock Exchange tick. This is the advanced decline line up here. Okay, all your information about the advanced decline line, the lowest advanced decline line, the average advanced decline line, the breadth, and then of course the candle configuration. All right, yellow and blue candles indicating, all right, when all of these factors are higher and or lower. That's the quad indicator. Down below over here, okay, we actually have what's called Quantix, and this is specifically what it does is it's a running tabulation of the New York Stock Exchange tick. And the reason I thought that this was an interesting screenshot, and hey, listen, this is from today. Okay, the reason is we were just accumulating all day negative ticks. Even when people thought the marketplace was going to rally, we're still accumulating heavy negative ticks. We were a minus 32,000 tick when everybody thought we were going to rally today. I just wanted to point that one out. Stay with us to the end of the webcast. Again, I'll provide you a link for this. Moving on, okay? A little bit of a housekeeping item, and especially with everything that's going on right now, I feel pretty strongly about this. Listen to me. What you're going to learn tonight, this is going to be a little taxing for some of you. Is that okay? Okay? I mean, listen, when I say it's going to be a little taxing, you're going to have to sit there, you're going to have to pay attention. I say shut the door, turn off Skype, turn off chat, okay? Close Facebook. Facebook's worthless anyway. The phone's on silent mode, get rid of the kids. If you have kids, get rid of the grandkids, definitely get rid of them. The greatest thing about grandkids, you can give them back. The dog can stay. If it's quiet, listen, and I always say this, if you took the time to be here, be here. It's important. Okay? This is incredibly important for everything that you are thinking of doing and everything that you currently have on in this marketplace. Focus on being here. Here's a little bit about myself. Again, my name is Don Kaufman. I started in this business quite some time ago, actually in the late 90s. And, one of the reasons, that I'm here, well, I watched order flow for 15 years. So I actually grew up in and around traders. As I said, I started trading in the late 90s, but before that, I had family that traded. I actually had an uncle that was a market maker in the early 1970s, but he started a trading firm and they owned over 500 seats on exchanges around the world. So I grew up around it. I got involved in the late 90s. Then I went to work for a startup brokerage firm about 3 years after my entrance into Chicago. These guys I knew from the floor said, come on, work with us. You get to fly around the country, talk a little bit about options. It'll be great. So I actually built the education division of Thinkorswim all the way back in 2001. I was there when we took the company public in 2007. I was there when we were acquired by TD Ameritrade in 2009. I actually went on to run education from all the way from 2010 to 2015. I ran the education division of a company, TD Ameritrade, that had over, at the time, 7 million clients. And what that gave me access to, I got to watch flow. Flow basically is, and people have no idea, like, whoa, what's watching order flow? I had access to everything you did, and we studied it. Okay, we studied trades. We know what works, what doesn't, and we learned a tremendous amount from it. And what we're seeing in the volatility right now, people, this is some of the best takeaways that you guys are ever going to get. I'm telling you, tonight, okay, this is like the pinnacle of what you learn from watching order flow for all these years. And again, what we've learned comes from watching billions of dollars in others' mistakes and really the knowledge of what works best for retail traders. So this is me. That's it's a more recent picture, I think, than that one, right? This one's actually, I was in studio on TD Ameritrade. That's actually their network. Happen to be on there tomorrow morning. I'll pop into the TD Ameritrade network tomorrow morning and do a TV slot. This is also, that's me on CNBC pitted against the man himself, Mr. Wonderful. I don't want to ruin it for you, and I always say this, but he could not possibly been a nicer guy. Really is, a great guy. With that, let's dive into it. We're about to go head on deep into this. Listen, you want to thrive in volatility. I mean, it's a big gaping question. Before I go any further, some of the subject matter that I'm going to discuss tonight, and I want you guys to understand this. Some of the subject matter I'm going to discuss tonight is going to be a little bit upsetting to a few of you. Listen, I recognize what has gone on in the marketplace in the last 4 days. Okay? I recognize it. Listen, I don't recognize it as, an educator standing behind a screen. I ran, again, a very large brokerage firm, and I walked people through everything in 2008, 2009. I've seen everything. I know what people are doing behind their screens, okay? Because I've lived through it time and time again. Some of the stuff I'm going to talk about, especially initially here, is a little upsetting. I'm telling you, okay, you need to learn this. What I'm going to talk about is critical to survival in volatility. And, you came here tonight in order to learn to make money in the midst of some of the extreme. And we're going to get that done. Okay. But before we move forward, there are two critical components that you have got to address. It's absolutely mission critical. The critical components in navigating volatility. When you start getting a marketplace that is getting a little rambunctious, you have to actually break down everything that you're doing. And this is something that was taught to me very early on. And I worked for a really prestigious individual and trading firm in Chicago. In volatility, we look at defense and offense. And they used to break it down just like you would talk to a football team, playing soccer. It doesn't matter. You have to break it down to defense and offense. Okay. The first thing in terms of defense, control the risk you have on. If you can't handle the risks you currently have on, there's no chance. You're screwed. There's no chance you're going to profit from the onslaught of volatility. Most people are in this category. They have no defense whatsoever. Control the risk you have on. Number 2, offense. Place viable, defined risk strategies designed for extreme volatility. Extreme volatility is the single greatest wealth creation mechanism the markets have to offer, bar none. People think it's always, it's a bull market, it's this. It's volatility. It's always volatility. You think about this, the stories that are told, okay, of some of the greats in the marketplace are not like, Warren Buffett from the 1960s, and push all of that aside, okay? Some of the greatest stories of the traders that really killed it, it's always during extreme bouts of volatility. And that's where I make and have made my career. So we've got to go through, okay, both of these components. We're going to hit defense first, offense. You guys ever heard that terminology, All right, the best offense is good defense. If you don't have defense in the marketplace, you're dead. Now, some of you might say, I've got nothing on. It doesn't make a difference. You're going to have something on. But if you can't control what you're about to put on, there's no way to make money in this business. Okay, it's about controlling risk first, then you can go on the offense. First, what's possible in the extreme. This is me, okay? And I'm telling you right now, this is where I said things can get a little upsetting tonight, okay? I am a volatility trader. Always have been, always will be. If you've ever listened to any of the videos that we've done, you would know that, okay? I live, I thrive in vol. This happens to be, okay, what we term, okay, the net lick. That's 1, 2, 3, 4. It's a 5-day net lick. Okay, it's a 5-day net liquidating value. This actually includes, I believe the 23rd was Sunday, so your Monday, Tuesday, Wednesday, Thursday. And what we basically have is about $40,000 in profitability, okay, on a $200,000 account. This is real, okay? This is not, you want realistic? That's about as realistic as it gets. Speaking of which, that screenshot is taken from right here. This happens to actually be the trading platform. This is Thinkorswim. If you're unfamiliar with it, well, that's okay. I'll forgive you. But wow, the bonds are rocking tonight. If you're curious where it came from, I took that screenshot, okay, before the close. All right, I was putting this presentation together while the markets were tanking, and again, a little scattered, but here. This is actually the net lick at the end of the day. I actually cracked to 252. Again, that's my 5-day net liquidating value. Effectively, we're up precisely $40,000. Okay, and I hedged off on that one. And I wanted to show people, all right, that's what's possible in the extreme. But I want to remind you, you can't get to the offense without a good defense. You can't do it. Also, a few trade examples. You're going to be seeing me. I'm going to take you through this. This is a SPY risk twist spread. These are all trades, okay, that I executed today. That's the on day. This is the off day. Okay, that's what I paid. This is what I took it off for. You're going to see me go into some great detail for this particular trade. Well, this evening. Okay, that was a SPY risk twist spread. This is actually an XLF risk twist spread. These are volatility spreads. All right, paid 36 cents for it. Okay, got back $1.35, 36 cents, well, $36, turned it into $135, 275, percent return. The previous one's a 485% return. This last one over here, this is a VIX vol spread. Ooh, I'm going to take you through this one because I paid nothing up front with a $3.75 return. You know why I'm showing you this right up front? Because I want you to know what's possible, okay? So that you'll at least tune in and understand that if you don't have the defense, you can't get this far. And that's why I'm actually showing this to you, okay? In volatility, the defense has to be first. Listen, before you get all giddy, and people always get, I want to make money, okay? Before you get giddy in what volatility can produce in returns, yeah, you need to understand your risk. And you better be capable of controlling the positions that you have on. So listen, risk. This is a slide I use all the time. Your money is on the line. That's what risk is about. And how you handle your risk is directly and definitively correlated to your success in the markets. Too much risk, what are you going to do? You're going to panic. You're going to lose control. And you're going to continuously close crap at the worst possible time. I will say this. If you closed anything, okay, at any point in the last 4 days, probably a good idea because you probably cut off a degree of your risk. But I'm telling you, people, you're consistent with your panic. Listen, I have looked at hundreds of thousands of accounts. We studied accounts. We don't look at individual account and go like, how is Joe doing today? That's not the way it works. We actually use big data. We studied hundreds of thousands of accounts. We say big data. We'll actually mine through data. And, when I worked at a brokerage firm, we mine through the data. We say, who's trading options? What are they doing in options? What's successful? What's not successful? And you actually build code, algorithms to go back, okay, and retroactively see what people are doing. I've seen what works, what doesn't, and what doesn't work often gets repeated over and over again, okay? We got to stop that because you're going to end up, okay, well, unfortunately, like this. All right, with that, let's start talking a little bit about volatility. First of all, what can implied volatility do for you? How many people that are joining us, and again, I know some of you guys, you're watching this, okay, it's late at night, but how many of you, all right, and please answer the question. I don't care if you just yell at your computer screen if you don't want to type it in. How many people really understand what implied volatility is? It's okay, all right? Show of hands, yes, no. Okay, how do you really understand implied volatility? Because when we start to go down this path, there's no going back, people. And implied volatility, I think, can help you substantially. Maybe I'm going to give you a little bit of a different definition tonight from what you're used to. Implied volatility. First of all, I had to put the definition. It's the volatility that justifies an option's current price. He said the O word. Yeah, implied volatility does mean options. Timeout. Nobody here tonight has to necessarily understand options. Are we going to talk about them? Yes. But we're going to talk about options initially to understand our risk. It's not what you think it is. I'm not here to be, everything about options and my little geek spreads that I just showed you a moment ago, and they're little geek spreads, okay? Just don't worry about that. But we're going to use options to be able to gauge our risk, right? Here we go. First of all, you have a stock trading at 100 with a 20% implied volatility. What does 20% volatility mean? Okay, it means this. Standard deviation. You're like, what? It means the stock can go from 80 to 120, and it's going to stay in that range 68% of the time. Now, let's break this down for just a second, because if I can get you to understand this, okay, it's going to open up the world to you, and things are going to start to make sense. When you look at a volatility, okay, and that volatility says 20%, what it really means, it's 20%, it's movement. If you have a $100 stock, it kind of means it can move up 20% or down 20%. And it's supposed to stay in that range 68% of the time. Now, whenever I pull the 68 out, people are like, where'd that 68 come from? Well, those of you that are engineers, right? Come on, how many engineers do we have in the room? As soon as I mention 68%, they get giddy because that's one standard deviation. Listen, this is like anything you do in your life, right? What? There's like, really, really good drivers that are up here in the curve, and there's really, really bad drivers that are down here in the curve. Okay? But most of us fit in the meat of the curve. What's funny is everybody goes, you're a crappy driver. Well, if everybody's a bad driver, then we all fit in the meat of the curve, right? And then there's California drivers. It's somewhere over here, outside the curve, right? But listen, all I wanted to explain to you is when you look at this in 20% vol, okay, and it says it can move up $20 or down $20, but here's the key to this. This is 1 year. You're like, but I don't care about 1 year, Don. Who cares about 1 year? They always standardize volatility for 1 year. So if you know this is a movement that's expected to move up $20 or a movement that's expected to move down $20, and it's expected to do so within 1 year of time. Time out. Does that help you? Does that help you? You're like, I don't know. Okay. How about this? Would it help you more if I didn't do it for a year? Would it help you more if I did it for 1 month? Would it help it more if I did it for one week? Would it help you if I actually did this for one day? Because once you know what that volatility is, couldn't you just say, forget 1 year, let's figure out a month, let's figure out a week, let's figure out a day, right? You could do all of it. Why? Because you already know what the volatility is. That's the beauty of understanding volatility. Now, we okay so far? Because we're going to go a little deeper than this, because the volatility, and we're going to look at real examples. Because people are like, think about this. How many of you know the VIX? How many know the VIX? The VIX, the VIX, the VIX. Let's go look at the VIX. Where's the VIX? Okay. Now, time out. That thing's almost at 40. Do you know what the VIX really means? When people call it's the fear indicator. No, really. The VIX is the volatility for the S&P 500. Why do you call it the fear indicator? Because CNBC told me. Listen, that's all well and good, but this is the S&P 500, okay, vol. So what is it? 40%. Now time out. Where's the S&P 500? The S&P 500 right now, I can't believe I'm going to say this, is at 3,000. Right now, based on volatility, that thing's supposed to be rocking 40% higher or 40% lower. That's like you're playing pin the tail on the donkey, okay? And the donkey is the size of a broad-based barn, okay? It's huge, people. It's a 40 vol. When you start to get the VIX this high, let's go back. That's 3 years, okay? That was what they called the VIX explosion. But you got to go back like 10 years. That's how big the spike we're seeing right now, okay? You got to look at some serious time frames in here. This is going back to 2010 and 2011. If you guys don't remember, in 2011, we thought we were going back into the financial crisis at that point. Over here, this is 2015. This was a full-blown crash that happened in 15. We recovered. That's the kind of movement that we're talking about right now, right? That's the kind of movement, and I want to reiterate that. Okay, now, implied volatility, an expected price move. So what does implied volatility do? Well, as he said, implied volatility, it justifies an options price. Yeah, you know what? I can't stand that definition. Bottom line is, what can you use it for? What can you use volatility for? You can extrapolate volatility into stock price movement. It's termed expected move. You can take volatility, all right? You can take this little volatility. Ready? Here we go. It says 20%. You can take that and you can then ascertain how far Apple can move. You can ascertain how far Tesla can move. You can ascertain how far Microsoft can move. We good? How can you do it? Well, I told you. If you want to survive in volatility, and I really mean that, if you want to survive in volatility, you better listen very carefully. Expected moves. This is what expected moves. 30 days out, the stock can move this far. 60 days out, it can move this far. 90 days out, it can move this far. But let's just move on. Expected move and probability. So we know that this expected move defines a one standard deviation move. It's 68% of the time. Let me detail this, okay? Therefore, there's a 68% chance of an underlying closing inside the expected move. Okay, you want to see what it really means? This is an option chain. There's 11 days and 13 days and 15 days and 18 days. See? 20 days and 22 days and 25 days. Bear with me. We're going to go right from right here, right? Let's go right across the screen, and I want you to look right there. Some of you guys, if you're on a mobile app, zoom in. Zoom in. You see that right there? Okay. That one says what? It's about plus. Okay. It says plus or minus. And I say, I know it says 1982. We're going to say plus or minus 20. In the next 22 days, whatever the stock is. By the way, you know what's funny? I cut the head off this stock. I don't care. I don't want you to know what stock it is. I know what stock it is. It's an ETF. It's called the Spiders, but I don't care. I took the screenshot. All you need to know about whatever stock this is, that stock can move $20. Okay. And it's likely, okay, it's going to move $20. That's what I'm getting to. It's going to move $20. That's its expected move. That's what the options market can do for you. The options market can actually give you, hey, what kind of range are we expecting over here? You're like, oh, okay. Listen, not every trading application has expected move. You can use the Money Straddle as an alternative. Okay, add the at-the-money call, the at-the-money put, yada, yada. What does it look like? Here. Okay, what's the at-the-money call, the at-the-money put? For those of you that speak geek, here's an expected move of about $11. Okay, you could just add the at-the-money call to the at-the-money put. Now, listen, we're going through a lot and we're going through fast because I'm going to spend a lot of time in a moment really talking about how to contextualize this, how to use it tomorrow. Okay, what you need to know tomorrow. We okay so far? All right, because this is important to me. There are a ton of implied volatility opportunities. Understanding implied volatility, it's a step in the right direction. Understanding of these metrics is a key, all right, takeaway for risk management, the next level. But let's explore volatility and implied volatility and expected moves on various products. You guys give me stocks. Anybody have stocks? I have Tesla and Facebook and SPX and Microsoft and Walmart and Google. Let's look at some different, stocks and see what is their expected move, huh? You guys tell me, because we're bringing it up live. I do it live, okay? We're doing it live. You give me the symbol and I'll tell you what we're going to do. Okay, so the first one we're going to bring up, I like this one, LVS. You know why I'm bringing up LVS? Okay, whoever put that in there, look, see a position here, a position here. I got positions everywhere, people. Las Vegas Sands. Why am I bringing this up? Because it's downright scary. By the way, I am short Las Vegas Sands. I'll make that abundantly clear. I'll tell you any position that I have on. Las Vegas Sands, in the next 22 days, okay, is slated to move up or down $8.50. Okay, what else you got, Don? Let's go over to Tesla, okay? Tesla in the next 22 days. So we're just using 22 days. Why? I don't know, because I looked at that first. Tesla is slated to move in the next 22 days $141.21. Okay? That's a comfortable number. I'm comfortable with it. Okay? Think about the insanity of Tesla. Is there anything more volatile than Tesla? Okay? Oh yes, I can think of a few. All right? Why don't we go look at Spacely Sprockets over here. Spacely Sprockets is, by the way, I'm making fun of Virgin Atlantic. All right? Oh, sorry, Virgin Galactic. I get that confused. So there's Virgin Atlantic, okay, Virgin Airlines. Now we have Virgin Galactic. 22 days, it's almost a $10 expected move. But it's only a $22 stock. It's insane, right? I just want you guys to get a feel for this. And then you can come right over here and you can say, what's Apple going to do? What's Apple going to do in the next 22 days? It's going to move $30 in the next 22 days. And it's supposed to stay in that range. Time out. You like this stuff so far? Okay. Because you're looking at it and you're like, this is kind of cool. All right. I got a question for you. What are you going to do with it? What are you going to do with it? What are you going to do with what I just showed you? Huh? That looks cool. Yeah, how do you use it? Right? I know. Expected move. It sounds like a real party. I'm in, baby. What are you going to do with it? How do you use it? Okay? Because this is where everybody gets totally like tongue-tied. Like, I don't know. First of all, I'm going to show you one little nuance for expected move. Okay? It'll pretty much change the way you look at the marketplace. Be warned. So I'm going to show you that momentarily, but I am going to tell you there are literally dozens of different trade opportunities, dozens of different risk metrics, all surrounding expected move. All these trade opportunities, though, are around expected move because if you don't know what the stock is capable of, you're blind. Think about that. If you don't know what your stock or product, whatever you're trading, I don't care if you're trading oil, you are blind. You want to see what you can do with it? Let's get down to it. Expected move and your risk. Well, you now recognize, okay, kind of aggregated risk, and you're ready to calculate portfolio, use the product you selected, yada, yada. Okay, take the number of shares and double it. Listen, I actually pulled this particular slide and didn't alter it at all. And I pulled this slide, okay, from an old institutional presentation that he used to give to money managers at TD Ameritrade. People that had in excess of $300 million under management. He used to teach the exact same exercise too. I am going to take you through the exercise, okay? I'm going to do it briefly, but I want you to see what is possible, okay, with expected move. All right. The stock that we're going to do this on is going to be, well, let's come in here. Let's use Microsoft. Why am I using Microsoft? Come on, it's just widely held underlying. We're going to use Microsoft. Okay. Curiosity, okay? Admitting it's the first step. Does anybody here have a position on in Microsoft? Does anybody have a position on in Microsoft? Even if it's part of your fund, okay? Do you have a position on in Microsoft? Anybody? Anybody own it? Whoa. Almost everybody. Okay. Wait, I got one. I got LT Tanner. Yeah, nice. LT was telling me he's actually short. Okay. Oh, a couple other people short in here. Nice. Excellent. Okay. There's a ton of people, by the way, that have positions on in here. All right. If you don't, that's okay. What we're going to do is Microsoft's had a little bit of a rough ride, obviously, the last couple of days. Everything has. Like, I don't want to make light of this. But there's a reality that you have to recognize, and this exercise is going to take you through that. Kind of an interesting irony, and one of the reasons I'm actually picking Microsoft, you know that up move is almost as vicious, okay, as the down move. Look at the time frame for it. I mean, you just don't see stuff like this too often. If you, 1, 2, 3, 4, 5, 6, 7, okay, 7 days to get up there, and 1, 2, 3, 4, 5, 6 days to get down. But these moves, okay, on a percentage basis, pretty phenomenal. I mean, it was up just, 2 weeks ago. What? 18, 19%. Now it's actually down. Okay. This is almost a 20%. In fact, let's just call it time of death, 20% move. That's technically not just corrective territory. Now we're actually considering what? That's bear territory inside of Microsoft. This is actually why I selected it, because the up move, all right, was as vicious, if you will, pretty much as the down move. The volume out there is huge, people. Okay. Why am I bringing this up? Here's the exercise. The exercise is this. Okay. If you want to survive, one of the key areas of survival of volatility, one of the key areas of expected move, if you want to be able to survive, okay, you have to take the number of shares that you own. So take the number of shares. So how many shares? Number, okay, of shares. Okay. And I don't know how many you own. The number of shares you own. Let's say that somebody in here owns, what do you want to make it? Make it 300. Okay. 300 shares of Microsoft. Okay. You own 300 shares of Microsoft. Time out. Are you comfortable? The number of shares you own, let's just say, is 300. Are you comfortable? Comfortable with what? Are you comfortable owning 300 shares? You go, I'm going to use a stop order. You're already out. You're dead. Okay? You're dead. And if we rally back up tomorrow, you're still dead and you're out of the trade. Okay? You want to survive in volatility? You have to actually stand the test. Okay? It's the expected move test. What's the expected move test? The expected move test goes like this. Find an option chain, and I'm telling you, you're going to want to watch this, okay, 100 times after you've seen this. Find the option chain closest to 30 days to expiration. There it is. See that option chain right there? It's March 27th, okay? March 27th, there, right there, 29 days to go to expiration. Take the expected move. Go right over here to the expected move. The expected move is $17, okay? So if the expected move is $17, you're expecting $17 of movement on 300 shares. So how much money is that? Okay, how much money are you going to make or lose? Well, let's actually take you through a quick calculation. See this? This is our trusted calculator. Now, I know I've written all over the screen. This is cool. I can actually move the calculator behind the screen. But in our trusted calculator, I'm going to squeeze this down so you can see it. All right, here, I'll blank it real quick. See if I can do it someplace where you can't. That's good enough. Perfect. Okay, so we're going to take the 300 shares and we're going to multiply it by 17. Equals $5,100. Time out. Okay. This is an easy exercise, right? I want to know something. Are you willing and able? Are you willing and able in the next what? In the next 30 days, okay, of taking on $5,100 of risk. It's plus or minus. I'm not telling you which way the underlying is going, but I'm telling you something here, and this is going to be absolutely, okay, definitive, right? When I say definitive, I mean I don't care what you might say, what you might think, definitive. You're going to make or lose $5,100, okay? That one is almost assured because a $17 move is already priced in. $5,100. Are you comfortable making or losing $5,100 in the next 30 days? Okay? Anybody? 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 Now, okay? Take this and multiply it by 2 because that is what we term probability of touching. You're really going to be taking $10,200 of risk. $10,200 of risk is going to be, all right, your extension capabilities in the next 30 days. $10,200 risk. All of that is going to occur inside of the next 30 days. You can go back over 30 days and you can look, you go, how accurate is that? It's deadly accurate. The regression analysis on this is bar none. It's phenomenal. Okay. This is how portfolio managers will actually measure risk. All they do is they take the expected move, they multiply it by the number of shares, okay, and it comes out to 5,100. Then they just multiply that by 2. I know there's a lot going on the screen, and if you're looking at this for the first time, you're like, holy crap. Let me ask you something. Are you comfortable taking $10,200 of risk? Okay, I need to know that because you know what? Over 100 people just came into our Q&A over here and they said, yeah, I own Microsoft. Yeah, I own Microsoft. I don't know. I just came up with 300 shares. All of you have $10,200 of risk on the line in the next 30 days. Okay, go fish. Because if that's too much risk, you got to slice back the number of shares or you're going to suffer. Okay, this is when people start using stop orders and they start using, listen, if you use a stop order, you're out. You already took your loss. And your loss on 300 shares is a heck of a lot more, okay, than what I just showed you. Because the stock is down $12 today. Are we good? Does everybody kind of understand what I'm getting at over here? People, this is not 101 stuff. This is not usually the stuff that I would bring to you in a presentation, you know, especially when people are new. Maybe it's like intimidating to you. Can you imagine in just 5 minutes, I pretty much showed people how to take what? Expected move and convert it to how much risk you're about to assume. How many underlyings could you do this on? You realize you could do this in your entire portfolio. You could use the spiders. You could use the S&P 500. Okay? Right now, you want to see what kind of risk you're projecting in the spiders? The spiders are projecting, okay? Get this. That's the spiders. They're projecting $24 of risk. 24, almost 50. Do you know what that means for an expected move? Do you have any idea how big this risk is? Now you're looking at plus or minus what? That's almost a $50 move when we talk about probability of touching. $50 this thing could move. It's only a $300 product. That's the entire S&P 500. Are you scared yet? Okay? Because I'm going to reiterate one huge factor. If you can't control your risk, if you can't understand it, remember, okay, to make money in volatility, you got to get your arms around what your risk happens to be. Now, I know not everybody necessarily has big risk on, but this stuff is applicable to even your 401k. And I can show you how to do that stuff on your 401k, on your IRA. You go, I own mutual funds. Good, because I can explain it on a mutual fund. Okay, I can get you down, okay, to the dollar of what your risk is for every move that this marketplace is going to make. All right, and I'm telling you right now, it's the only way to be able to sustain yourself in the midst, okay, of the extreme. And I just want to stress that to you. Listen, this monkey knows how to manage volatility risk, okay? Hopefully you do as well. By the way, I'm poking fun at myself with that one a little bit there. We okay so far? Everybody good? All right, deep breaths, deep breaths. Because this, hopefully, all right, is good. I like it. It's a chimpanzee, not a monkey. Okay? It is. It is. Its chromosomes are very much like my own. Now, okay, this is good stuff. Okay. I'm just making sure everybody's okay because at this point, we're going to move forward, right? We're going to move forward at this point, and I like to make sure that everybody's on the same page. Okay. I'm going to go a little easier on you for the back half of this. All right. So again, we're 40 minutes into it, and we've already gone through a little bit about how to identify risk. And I know that when I first show people this, like, how can I use it? Like that doesn't sink in. But if you know, okay, what you're comfortable with, like a moment ago inside of Microsoft, I'm like $10,000 of risk. Okay, how many people here really realized how much risk they may have had on in Microsoft? Because I'm going to tell you something. Had you had known that 4 or 5 days ago, what do you think your position size would be? I guarantee it's not as big as it is right now. Okay? I guarantee it. The position size that you have on is likely killing you. Okay? And to be successful in this business, you can't be sitting there, okay, panicked, stressed, okay, salivating over the fact that you're taking those hits. And it's just the easiest, most straightforward example. Like it's a layup to use this stuff. All right, let's actually go on, because once you have a grasp of your risk, okay, now you want to learn to profit from it. I mean, that's people who came here tonight, right? You want to learn to profit in the midst of extreme volatility. Okay, well, first of all, you must become impervious to wild moves in order to profit from them. This is something that, you know what, no matter how many times I say this, okay, it is the one aspect that people, they don't get it. They don't get it. You have to be impervious to the wild moves. Today, if you're sitting there today and you're like, if you're making money, awesome, okay? If you're losing money, not awesome. But on either side of this, okay, you shouldn't be surprised, you shouldn't be stressed, you shouldn't be any of it. You should be impervious to the wild move. You should sit back and go, bring it! Whether we're moving up 100 on the S&Ps or down 100 on the S&Ps, or you look at the Dow. You realize the move they had in the Dow? You know what? I promised myself that I would actually bring this up at some point this evening. Okay, let's see if I can actually get this up here really quick. I promised myself I'd bring it up at some point this evening, and that is, the Dow, because if you missed it today, that's 1,200 points. So it's not the largest percentage move ever seen in the Dow, but it is in terms of points. Okay, I mean, you're looking at a close that is 1,200 points lower on the Dow. And it's a little almost like awe-inspiring to see it. I mean, it's off 4.5%. You had a 5% down move. Go look at the NASDAQ. That's the Qs, a 5% down move on the NASDAQ. Okay, the financials just got crushed. Okay, the big tech stocks down almost 6%. Microsoft, it got annihilated. Make yourself impervious to them. How do you do it? Bring on the offense. Once you understand, okay, to a degree, and I just want to scrape the surface tonight of this. Once you understand to a degree that you can control risks, even if you didn't totally grasp the example I gave you about Microsoft, right? But once you understand, okay, the capacity to control risk, then you're ready to go on a volatility offensive, all right? And this is a little bit about offense. What kinds of strategies can you use? One of the first ones I'll mention, in-out spreads. In-out spreads. Now, if you've ever tuned in, okay, to anything I've talked about here at TheoTrade, you'll hear me mention in-out spreads, okay? Because in-out spreads, these things are volatility, okay, masterpieces. Now, I'm not going to go tonight into wild depth, all right, about this. I don't want to spend, 45 minutes going through this and make sure this is okay over here. Everybody sees it okay. So I am going to actually get into some of the tactics, though, of the in-out spread. Listen, this could be a stock. It could be any stock you could dream of, right? And let's say that this is a $200 stock. So it's a $200 stock. Now, I have no qualms. If you want to trade the stock, trade the stock. By the way, if you look over here, I don't ever spell stock. Okay, stock. I spell it stock. Okay, because I'm different. If you haven't noticed that yet, I'm a little different. So you have stock, and the stock is trading right at 200. I'm not going to actually use the stock. I'm going to use an in-out spread. I'm going to actually buy, in this case, a 199 call, and I'm going to turn around and I'm going to sell, okay, a 201 call. Now I'm using calls in here. You can use calls, you can use puts. Maybe you guys understand options, maybe you don't. Okay, I'm going to buy one option, I'm going to sell another option. How do I sell an option I never own? It's okay. Like, listen, for those of you that are brand new to options, let's say that this option over here, the buy side is going to cost me $3. The sell side, I'm actually going to collect $2. So what am I doing? With one hand, okay, I'm buying. With the other hand, I'm selling. I'm buying a 199 call, okay, and I'm selling a 201 call. This is only one of the strategies I'm going to go through. The buy is going to cost me $3. The sell is going to collect $2. What am I into this thing for? It's going to cost me $1, right? Now, for those of you that are brand new to options, buying a call. What's a call? Call gives me the right to buy the stock at 199. Call gives me the right to buy the stock at 199. Now, I'm not going to get into all the context of this, but if I have the right to buy the stock at 199, can I buy the stock at 199? Yes, I can, but I have absolutely unequivocally no intention of buying the stock at 199. I don't. So why am I buying a 199 call? Because maybe I want to buy the stock at 199. Nah, I just want the right to buy it at 199. Then I'm actually turning around and selling the 201 call. The 201 call. What's the 201 call? And first of all, how can you sell something you've never owned? I'm selling myself into an obligation. I'm selling somebody else the right to take stock from me at 201. So what do I have? The right to buy here. What also I have? I have to give somebody else stock here. If you could buy stock here and sell stock here, what's the most you could possibly make? Well, if I could buy the stock at 199 and I have to sell it at 201, the most I can possibly make is $2, of which I paid $1 up front. Time out. What are you really doing in here? What am I really doing in here? I'll tell you exactly what I'm doing in here. I am, and you're going to love this, okay? I am risking $1. I am risking $1, okay, to make $1. I'm risking $1 to be able to make $1. And people go, I don't like that. I went to a guy and he told me that that's all wrong. Really? Why would I be willing to risk $1 to be able to make $1? This is a volatility trade. All right, that's one thing I don't often talk about with in-out spreads. This is a volatility trade. Why is it a volatility trade? Why is it so good in volatility? I'll tell you exactly why. You guys tell me. What's going to happen in volatility? What is going to happen in the midst of volatility? Okay, you're like, well, we're going to tank. Yes, sooner or later we're going to rally. We're going to tank again. We might rally some more. And after we're done rallying, we'll probably tank. Anybody? Does this sound somewhat familiar? No? I mean, listen. Right now, all we're doing is actually tanking. But in this particular example, the reason I want to use the in-out spread in the midst of volatility, okay, let's say the marketplace does tank. And I'm going to give you an example like this. And why am I doing it with calls? This trade is unequivocally bullish. When I do a 199, 201, I want this stock to go flying. I know the stock's at 200 right now. Do I want the stock at 200? No. Where do I want the stock? Okay. I don't know. Maybe it goes all the way to 210. Maybe it goes to, 203. I don't know. But I need the stock to go up. Let me ask you something. Okay. Do you think that today might be a viable day? The market today was getting clobbered. Would you do a bullish spread today? Would you? All right, it's a fair question, right? Would you do a bullish spread like this today? Would you put one of your dollars at risk? And if you do $1 in options, that's $100. Would you put $100 at risk today? Okay? Would you be bullish? Being bullish, okay? Couple of people. Right? So, because I'm going to get there. My answer would be absolutely. I would totally do this. Why wouldn't I do it? Might as well. I put on a bunch of these today. I'll actually show you some of the trades. Okay? But I'm going to tell you what happened to me today. I put these trades on, okay? And let's say I put them on a $200 stock. I put the trade on a $200 stock. What did the stock do after I put the trade on? Okay? Here's the stock right here, right? The stock, it started tanking. You know what's going to happen? You're like, oh no, I'm going to risk $1. I'm going to risk $1. Hello, this trade right here is good. I didn't tell you this, huh? This trade's good for a month. You know what can happen in a month in the midst of volatility? We tank. This stock goes all the way to 190. Yeah, well, tomorrow the stock actually rips the other direction and ends up at 205. What am I? I'm gold, Jerry, gold. You're going to make a full buck on it. In-out spreads, okay, make you impervious to wild volatility. The worst I can do in this trade is get ripped by a buck. That's it. That's the worst I can do. But the thing is, it makes me capable of sustaining the most hideous moves in this marketplace. And I said something a moment ago, and if you missed it, okay, you're just totally missing the whole thing. You must become impervious to wild moves in order to profit from them. What the in-out spread really does, okay, you put it on here, the market tanks here, and then rips the other direction here and rips back down over here. Okay, yes, it's infinity. That's what you're getting with in-out spreads. Want to see a couple of them? All right. This is an in-out spread. Now, okay, the market's been rallying a lot lately. It's been rallying a lot. So this is a spread that I put on, okay, on Lululemon. Now, every single trade that I'm showing you here, I like to make the trades that I show you. All right, I don't want to show you something from a week ago. I don't want to show you something from a month ago. I want to show you something I did today, okay? Because today I was one hyperactive trader. I put this thing on, a long time ago. And I got to tell you, you know what Lululemon did? Here, you want to see exactly what Lululemon did over the last couple of weeks? Bring it up, okay? Let's do it. Let's do it. Let's do this. So what did Lululemon do? Come on, Lulu. Bring up Lulu. We don't need Microsoft. Lululemons. Oh, come on. Lulu. Couldn't have been better yoga pants. Could not have been better yoga pants. So I put this trade on, okay, all the way back here. And now I'm going to close up this left side thing, right? I just want to show you on a chart the exact day and time that I put this on. I showed you right there, okay? February 3rd. People, I could not have been more wrong. I was wrong all this time over here and then right. Okay, beautiful. So I'm right. Who cares? Yeah, well, that took every $235 I invested. I got back $370. It's a 57% return. Now, time out. Okay, does this have to be a, $235? Of course not. Okay, I actually did this quite a number of times. This could be $2,350 to get back $3,000. Okay, $700. Still a 57% return. Okay, that's a Lululemon spread. Again, is that recent enough for you? Recent. Okay, because I whacked out of it today. Today is what? It's February 27th. All right, moving on from there. We good? Everybody good? Next one, QQQ. Again, I wanted to give you something recent. The market started getting a little volatile a few weeks ago. Here it is. I put it on February 6th. Okay, February 6th. I put this little monkey on right here for what? Well, this one I actually put on basically for an 80-cent debit. I got out of it. This one I actually got out of earlier in the week. Now, I could have held on to it, okay? But I figured that 74% return. Every $80 I invested, every $80 increment that I invested, I got back $139. It's a 74% return, okay? This, again, it's an in-out spread. Did I know volatility was coming? No. Does it matter? No. Okay. Why? I was wrong until I was right. That's all you need is to sustain the trade long enough to be right. Duration over direction, people. Next one. Okay. JP Morgan. This is a JP Morgan in-out spread. What did I do inside of JP Morgan? All right. JP Morgan. Same thing. Okay. Same time frame. February 6th. When did I get out? 25th. 2 days ago. Every 81 cents that I risked, I made what? $1.59. It's $81 invested. I got back $159. I will reiterate, you didn't have to do it that way. You could have gone out and you could have said, you know what? 81 bucks just isn't for me. But I want you guys to realize you have a $2,000 account. It's fine. You could have had $810 to be able to make what? $15.90 on here. Okay, that's fine. It's fair game. It's a 96% return. Okay, these are home runs. I wasn't expecting the volatility to hit, but this is the trade to have on when volatility, and when you're in the midst of volatility right now, these are the spreads you want because you can be wrong day in and day out and you can sustain it long enough for that marketplace to move. It's not about direction, people. It's about the right trade to have on. Next one, EEM. This is the Emerging Markets ETF. I put this one on February 10th, took it off February 24th. Every $90 I invested, I got back $156, 73% return. Okay, it's a 73% return. And, somebody was like, well, but if you're wrong directionally, okay, but what did we just say? If you're wrong directionally, you lose. Yes, you do. What can I possibly lose in here? I could lose my 90 cents. Once in a while, you might lose your 90 cents. Who cares? The probability of you making profitability, okay, is drastically higher than losing the 90 cents. And that's the point. People are so fixated because but somebody on CNBC told me I had to be right, because they focus on direction. They don't focus, okay, on the fact that how you make money, especially in volatility, is just movement. It's pure fluctuation, okay? And I'll tell you right now, we're fluctuating. Listen, you have got to get this in your life. This is why you want to use in-out spreads. It overcomes, okay, the high probability of being stopped out. Did you see me use a stop order here? Did you see me use a stop order here? Of course not, because the trade is defined risk. See, the trade defines your risk. It limits capital exposure. You never need to buy or sell the stock, and it provides a high probability of success because you can literally be wrong. The market tanks and then rips your direction, or vice versa. Maybe you put on this huge bearish trade, like I did. The market kept going up and then tanked all in one day, and it was huge. Okay, it was huge. You can be wrong in terms of price movement, and you can still come out ahead. And I'm telling you, you need this in your life. Listen, this is what our members are saying. Okay, use this strategy to double a small account, like Dylan T did, who wrote in, the in-out spreads have been very helpful, as I've been able to get on a hot streak and double my small account in 4 months via the use of in-out spreads, okay? Or minimize your risk by limiting your account's exposure in the market, like Phil S., who wrote in, using the in-out strategy last week, I locked in $1,275 in some HAL put spreads. That's Halliburton put spreads. And today, I locked in profits of $1,240 on several positions I identified. I've been averaging 7% a month for the last 4.5 months, profits of over $11,000, and I've never had more than 25% of my account at risk, usually much less. Enough of that. Let's move on. Enough of the in-out spreads. Now, this one's going to get a little bit more complicated. You guys ready? We're going to start to amp it up a little bit. This is VIX volatility spreads. Okay. There's a product called the VIX. You can actually trade the VIX. When I trade the VIX, I'm going to tell you exactly what I do. All right? I go out when the VIX, okay? When the VIX is at the right level, I go out, and I'm just going to explain it this way. Okay? I sell options, okay, in VIX. Why do I sell options in VIX? To buy options in VIX. I'm selling over here to buy over here. I'm selling over here to buy over here. Why? Okay, sooner or later, volatility amps up. Bottom line, okay? If you're willing to wait, sooner or later, your VIX will move, okay? And it will move, and it will move big. This, people, this is what we call a VIX volatility spread. And I'm going to tell you right now, you ain't going to see this anywhere else, okay? This is a live VIX vol trade. This one, okay, look at the date. It's today. Now, I'm telling you, I do not know anything about market direction here. This is where everybody gets infatuated with, am I going to have to know something about, pull up the MACD, pull up the Fibonacci, pull up the RSI? Okay. Did the Fibonacci people make you do it? I don't know anything about market direction. I always have this on. I'm going to say that again. I almost always have this trade on. This is a VIX vol spread. For those of you that understand it, you'll see what I'm doing. Okay. I'm actually selling puts in the VIX. I'm actually selling a put spread in the VIX. That's a $3 wide put spread to be able to buy a what? A $5 wide call spread. You know what the trade cost me up front? I want to make this clear. Zero. Because I'm selling something to buy something. I'm selling something to buy something. I'm selling something to buy something. This is a bullish strategy in the VIX. Now, okay, shall we bring up the VIX? Here's the VIX. There's the VIX. Okay. Let me zoom out for just a second. Okay. Here's been the VIX. I don't know that much, but I do know one thing. Okay. If I go out there and I continually put this strategy on, sooner or later we spike. When we spike, that's it. Trade comes off. It's that easy. Okay. The trade has very, very minimal risk in it. Very minimal risk. But I made $3.75 off of putting nothing up front. This one carried a little bit of margin, carried $3 of margin. Okay. The risk, though, we teach you how to mitigate that risk in there. Again, this trade was pulled off today, this morning, for a $3.75 credit. It's huge, right? This is the kind of trade. I'm telling you, these are the things you need to do, not for survival and volatility. This is going on the offense. This is looking for home runs in here. By the way, somebody's like, how many contracts? Do as many as you want. How many can your margin hold, right? If you do one contract, it's $375. If you do 10 contracts, it's $3,750. I'm going to remind you of something that I showed you guys when I first started this presentation tonight. Okay? When I first started the presentation tonight, what did I show you? You want to know how many contracts? Look at my net lick value. I was 211 on Sunday. I'm 251 right now. Okay? If you look at my account statement in here, if you look at the account statement, just so you guys are aware, right now, look at the bottom of this. $41,000 is tied up in margin. This is an IRA. Okay, so I don't have any it's margin, but it's all cash secured. This is an IRA. It's $41,000. Okay, that just turned $13,000. I know a lot of people look at that, $200,000 and you're like, oh, whatever. Okay, listen, that's only one of the accounts in here. Like I fire into the marketplace. But you know why I'm showing you my IRA? Because I think this is probably the most realistic for every single person that's on here. Because I don't want you to think that I have $200,000 at risk. Because listen, do I have to have a lot of risk to be able to make 40 grand? I only have $41,000 in margin. If every position I had basically blew up in my face, stocks that I own like silver went to zero. Okay, stocks that I own like GE and I own some Ford went to zero. I still can't lose but $41,000, but I was able to make 13 grand off that today. How? Things like VIX volatility spreads, right? Listen, what our members are saying. This is an email that came in literally this afternoon, and I want to thank them for it if they're tuned in right now, but it says, Dear Don, thank you for your service. Always on time, and you and staff answering my emails so promptly, so appreciated. I like to answer emails. I struggled the last months, placed the trades you suggested, and tried some of them on my own. Account size, not so great. So I had to work very carefully. This is an individual that had a really small account. Had to take off some RTS, that's risk twist spreads, and VIX trades, and could not so much. Because their account size, they were a little limited. But last week, I tried to keep near you handsomely. I made some good profits. Thanks to your guidance, to help me take the profits in the midst of volatile markets. I just felt great, and belonging to your TheoTrade with such excellent help and guidance is just amazing. Thankful, AC, blanked out their name over here. It's actually an individual that immigrated from South Africa and lives in Uruguay. Now that's a place to go from. They like to be a little bit below the equator, apparently. And I wanted to share that with you because this is one that it's realistic. The account size wasn't that big and taken off a couple of trades and had some difficult times, but it's all about volatile markets. Okay? Listen, this is why you want to use VIX volatility spreads. The VIX vol spreads, they cost nothing up front. Again, it defines your risk. It defines your risk and limits capital exposure, provides direct exposure. The VIX volatility spread direct exposure to what? To movement and volatility, and provides a high probability of success. You can even be wrong in this one and still come out ahead. The VIX is going to do what the VIX is going to do. All right? And I'm telling you again, you need these strategies in your life, not for survival in volatility. Survival of volatility is a different topic. You need this to get on the offense. You can't do what you were doing, okay, a while back. You can't go out there and like, I'm just going to find the next stock that goes up. I'm sorry, you're in a different world now. Wake up, okay? Because it's time to understand we ain't ever going back to warm and fuzzyville anymore. Now it's serious. Now we're volatile. And the last strategy I'm going to show you, this is the risk twist spread, okay? The risk twist spread, people, this is the mother of all volatility style trades, okay? This is my animal. This is also my baby. The first time I ever really hit a risk twist spread was back during the financial crisis, and kind of backed my way into this particular strategy, but I'll give it to you pretty cleanly. The spiders. Just the other day, we're trading, okay, at 330, okay, and that equals SPY. They're trading at 330, okay. I loaded up a strategy, okay, that's way out here. So basically, it's pin the tail on the donkey. Now that strategy out there only cost me a nominal amount. Let's say it costs me, okay, $1.80. Now what the strategy is designed to do is to take very, very measured shots. It only cost me $1.80. But for $1.80, it gives me an outside shot. If those spiders come ripping down, okay, to let's get crazy. Let's say these things come to 300. This little strategy from $1.80 can absolutely explode to 10, okay, to 12. The best I've ever done on one of these is I've turned $1.80 into 12 bucks, okay, but that wasn't today. Today I actually settled for 10 bucks on a risk twist, but I didn't do it in just one product. I actually did it in a bunch of different products, okay? What the strategy happens to be is an option spread. It is based, okay? It is based on a ratio. Before I get to the spider one, here's an XLF spread. What's the XLF? Okay, how many people know what the XLF is? The XLF, well, it's the financials. It's the financials. So hang with me here as I show you this, because I think this one's a pretty important one. In the XLF, right, it's only, at the time, maybe, about a $31 product. When I put this on, I put this trade on all the way back in December. Time out. What's happened between now and December? Okay, what's happened now December? Well, the market's done nothing but rally. Nothing but rally. I didn't know risk was coming. I paid a whopping 36 cents for this. So every $36 I invested, okay, I hit it today. Now this one had plenty of time left. I could have held it even longer. I got out for $1.35 credit. It's 275% return. Okay, every $36 I invested, I got back $135. Now, again, somebody was asking this question earlier, so I think it's fair to say, could I have done, okay, $360 to get back $1,350? Sure. Could have also added a zero to that, right? And could have gone out and done $3,600 to return $13,000 and change. And that's when you're starting to see, you're like, oh, I get it. Okay. I had a very negligible amount in here, right? In this particular strategy, if you're looking at it, you're like, it's a sell, it's a buy, it's a ratio. Now, if you were to actually know the contract size in here, and this is what everybody's curious about, it's a 1-3-1 ratio, okay? But this is a very, very powerful trade. It's all about the risk twist spread in the midst of volatility. The last trade I want to show you, this was actually another one that I took off specifically today. This one was actually put on right here, January 14th, taken off today. It's $1.80 into $10.53. I've been talking about risk twist spreads till I'm blue in the face for years. You only have to hit one trade in an entire year to make your entire year. Because you can go out and you can do a trade, right? And you can have what? I know I put it at one contract's $180. Yeah, you could have $1,800 to make what? Add an extra zero. Okay? You could have actually done just that. And you wonder, and maybe that doesn't make your year. Add another zero to it. Because I'm going to tell you right now, I did, and I'm not done yet. When I say I'm not done yet, okay, I'm not done yet. I've actually got more of these on. I've actually got one in XHB and XLU. If you haven't looked at XLU, this one, okay, this one's my baby. XLU, this is the utilities. They have crashed and burned in the last couple of days. And I'm still carrying the position in the XLU, which is right now, and I'll highlight this for you. Right now, my XLU one is already up 281%. Right? Am I going to hold it? Yep. Why? Because I already took other trades off. This is a 485% return, and I'm telling you, it's not the best one that I've ever had on. I've had one where I actually cleared over $12, okay? And I did that in 2018. 2019, we had a couple of them on, right? You only have to hit one of these a year to make it worth that $1.80 that you paid for it. It's big. It's really big. Listen, this is why you want to use risk twist spreads. Increase in value when exposed to heavy volatility. Increase in value when the markets sell off or rally huge, because there's actually a way to do this to the upside. Significant profit potential to the downside. Loses minimal capital if the markets would drift. If you put one on and the markets just did nothing, who cares? You lose $1.80. Who cares? You lose $1.80. You only have to put it on a couple of times a year. You only place it a few times a year. It's the perfect spread to reduce risk of a stock portfolio, right? Because if you have a portfolio, you own some Microsoft, you can actually use this trade against your Microsoft. And it's also just an excellent tool for just outright if you're seeking large returns. Again, I wanted to show you tonight 3 different strategies that I say you need in your life. And you do need these in your life. Okay? These are offensive strategies for volatility. The in-out spread, the VIX volatility spread, and the mother of all trades, the risk twist spread. Listen, the aforementioned trades, okay, give you the power to trade massive stocks, massive index products. I could have done this in the SPX. I could have done this on Amazon. You have pennies at risk. And if you're worried about time, everybody's always worried about time, and I get it. But every trade today was displayed, okay? We displayed this live here at TheoTrade, meaning that these trades, they're not just my own. If you noticed anything in common about these trades, most of them are placed right in the morning. Okay, I like to place the trades in the morning, out of the morning, in the morning, out of the morning. You want to know why? That's when I'm live. I'm actually broadcasting at that particular time. I broadcast this. Everybody can see the screen. Okay, I do videos on all of these. Everybody gets to see everything. You got no time, no problem. Maybe you can't watch it. Don't worry about it. Okay, the trade results were showing the perfect for part-timers. These spread trades, they're hands off. You can even use, okay, good till cancel. That's what they call a set and forget order type. Even a fraction of your time, it's enough to see results, right? I think you guys get that. Listen, these are all the characteristics of what we term volatility spreads. Now, volatility spreads, it includes VIX vol spreads. It includes in-out spreads. It includes risk twist spreads, okay? And the attributes of these volatility spreads are undeniable. I never bought or sold the stock. I define my risk in every strategy. The risk is limited to precisely your comfort level. Okay, you don't need a stop order. Who needs a stop order when you have these on? It's the perfect spreads, though, to reduce risk of a stock portfolio. If you think we're going to continue to tank, better get some risk metrics on, right? You better figure out a way, if we're going to tank, to curb that risk. But if you want to just build returns, it's also the way to do it. That's what these risk twists, that's what this VIX volatility spread, and that's what these in-out spreads are about. Listen, building, okay, all of these volatility spreads. Do not dare let these options intimidate you for a second. Now, somebody actually popped in here earlier and was like, I've never traded options, okay? You just heard in the last hour, right? You just heard in the last hour a little bit about options. You probably already have a bit of a feel of what I'm trying to do. Give us a few hours, okay? You're going to get it down. We can take people from the absolute novice to the absolute extreme. But I will also say a strategy, especially like the one that I'm showing right here, okay? This, the risk twist spread, this thing is an absolute massive power saw. Okay? Options, and I always say this about options, they are going to be the quickest, okay, the fastest, the safest, okay, and the easiest way to get where you want to go in this business. Okay? But if you don't know how to use them properly, that's where the horror stories come in. And I don't want you to use them incorrectly. It's just like a big power saw. Use it right, you're going to cut things like butter. Use the power saw incorrectly, okay? Your hand becomes the stick of butter. Not a good thing. Got to learn to use these things properly because they are power tools, okay? Listen, you can trade volatility spreads. Maybe you don't know anything about options. You got limited experience in options. Don't let them, again, intimidate you. And I always reiterate that because you're going to need these strategies for the foreseeable market future. You think this is going to be easy moving forward? Do you really think this is going to be easy moving forward? Don't worry, Don. Apple's down big. I'm going to buy the dip. Okay? Timmy told me to. I'm actually talking about the CEO. Timmy came out and told me to buy Apple today. Buy the dip. Yeah? Buy the dip, right? The new saying is going to go, what? Okay? Dip the buy. That basically means sell the crap out of every single, okay, bid that comes in there. When the market bids up, they're going to come and sell it. They're coming for you. There's going to be some wicked bounces coming in the next couple of days. Bounces that are going to make you feel, okay, like you know what you're doing again, just to take you down even harder. That's what volatility does to people. It makes you feel that you're doing everything at the exact right time to be dead wrong. If you haven't traded volatility, you don't know what it means yet, okay? I'm telling you, though, you don't know options. We can show you how, and we can show you when to place these volatility spreads. It's a matter of hours. What we do here at TheoTrade is create detailed recipes for all of the strategies we're showing you, including volatility spreads. Listen, you don't bake a cake without a recipe. Why are you trading without one? Like, this is what you need to know to successfully enter and exit volatility spreads. Like, how are you going to get into these things? Well, first of all, you have to know what makes a viable volatility spread candidate. Come on, what's a good candidate? Should I jump out there and, I should trade Spacely Sprockets, Virgin Galactic? Absolutely not. Okay, should I go out and trade Tesla? I do once in a while, but right now it's not going to fit. It's not going to fit the criteria. Amazon? Absolutely. Okay, you got to know what's going to make a viable candidate. What volatility should I seek out? That's critical. We're talking about volatility, but if it's too volatile, you don't stand a chance. If it's not volatile enough, you don't stand a chance. You have to have the right volatility. What expiration do I select? Have you guys looked at an option chain lately? Have you? Have you looked at an option chain lately? Okay. Shall we go into the spiders? This is the spiders. There's a 1 day, a 4 day, a 6 day, an 8 day, 11 day, a 15 day, set, hike. Okay. Look at all those things. What options expiration do you select? We'll tell you. What should be the delta of the option I buy? Okay. What's the options do I sell against my position? Okay. How do I build the trade? Like, physically, how do you build the trade? What's the right amount of risk for me? You better know that. If you have a $2,000 account, that's fine. By the way, people are always worried about, can I trade options with $2,000? You can trade options with $2,000. Can I trade options in my IRA? I do. So can you. We can even get you options approval at all the major brokerage firms. Okay. That's what I did for 15 years, is worked in the brokerage industry. But let me show you exactly what we do here at TheoTrade. We create recipes in trading. Okay? Listen, we create recipes in trading. And why do we create recipes in trading? Because trading is all about answering the what ifs. It's about what ifs. What might be a good stock or ETF candidate for volatility spreads? What's the correct options expiration cycle to get my volatility spreads? Like, do I buy them? Do I sell them? How much capital do I commit to these volatility spreads? What strike price options do I buy? How many do I sell? Right? In growing a small account, what should my allocation be? We have the answers. That's what we do here at TheoTrade. We build recipes with definitive criteria. We build checklists. Okay, I call it a checklist, but it's for each unique strategy. A risk twist spread is completely different than a VIX volatility spread, is completely different from an in-out spread. They don't even share common logic between them. But it's going to also encounter each unique variable, right? And it's going to cover it. Now, why do I call it a checklist? Because a pilot's in a cockpit, and that pilot in the cockpit is going through a checklist before they take off. Then when they're in the air and something happens, they got a checklist for that. Okay? Unless, of course, I don't want to make fun of Boeing right now. We'll leave that aside. Okay? They are checklists, though, and that is what's critical. It's not just about like, oh, how do I get into the trade? What are you going to do once you're in the trade? What are you going to do once you're in the trade? TheoTrade has the answer to the questions. What's the right probability? How many option contracts? When do I close the spread? What if the stock sells off big? What's the correct return for the strategy? What if the stock rallies massively? Can I fix a losing trade? Everything. Okay, they're flow charts. The how, the when, the why, at what price. It's just the beginning of the variables that you're going to face while trading volatility spreads. It is the beginning. And I'm going to tell you, because I know a lot of people that come out and they've seen a ton of different, it's a miracle strategy, not a miracle strategy. Okay? I'm going to tell you exactly what these strategies are about. Because I know that you can read what a spread is. You can read a little bit about volatility. You might even know how to build a few spread trades. But what you really need, you're going to need the recipe for success. 20 plus years of trading experience. That would be me. But I also had access to client order flow for 15 years. Okay? I viewed and studied over 7 million accounts. And I ran education, okay, for the largest brokerage firm at the time. All right? 15 years we had the largest options order flow in the industry. There is nobody, okay, that had access to this information that's out there, okay, promoting how to actually use big data, okay, and how to use it properly in effort to get this stuff right and building, okay, successful recipes based on it. Listen, criteria is your recipe for success. The following strategies and corresponding criteria require the utmost attention to detail. We spent years, and I say we, okay, it's not just myself, not just my experience, okay? We have 7 other instructors here at TheoTrade. We spent years fine-tuning this stuff. Everybody here at TheoTrade has a minimum of 15 years experience in this business. Okay? And when you approach the section on criteria and you're going through these steps, I'm telling you, you follow the steps to build a trade. We're doing a class, okay? It's Saturday, March 7th. Saturday, March 7th. It's a 3-hour long class, okay? It's live. This is not recorded. I'm doing this one live. It's a guide to surviving and thriving in extreme volatility. This is my mantra. I'm going to be the trade instructor for this one. It's Don Kaufman. The slide deck that is all the entry and exit criteria. It'll be available the morning of March 7th. Maybe you can't make March 7th. The course is going to be immediately archived. Then we will give you 24/7 access to it, okay, for download, okay, on TheoTrade Mobile, iOS, and Android. The course is $497. And I'm telling you, okay, between now and March 7th, I know people are like, they're worried. You can come in and we will help you immediately here at TheoTrade. Okay? You enroll for the class tonight. You start shooting me emails, okay, tonight. You'll get a response, okay, this weekend. You'll get a response tomorrow. We respond to these emails within 24 hours. If you're in trouble today, you get help tomorrow. Okay? You don't have to sit here and wait for a class that comes on March 7th. Okay? We had to put the class out a couple of days. But it is critical. This is a live class, but we're going to give you immediate help. It's $497. We have some added bonuses tonight. I'm telling you, hang with me because we have some added bonuses tonight. Listen, the class, the guide, again, to surviving and thriving in volatility. Here's the curriculum. First of all, you're going to learn defensive structuring of positions. You're going to learn how to be on the defense a little bit, okay? So even the most extreme risk is not going to keep you awake at night. The second thing, you're going to discover how to aggregate all of your market risk. Are actually going to learn about 401ks and IRAs. I know some people like, I don't have a 401k or IRA, okay? That's okay. Eventually you will. And if you listen to what we do in this class, part of the class is going to be, okay, how to be aggressive, how to be offensive. Part of the class is how to be defensive. It is critical that we understand both sides, okay, of that coin in this business. But you're going to actually know precisely how much you can make or lose before the market move. Understand volatility like never before. And more importantly, how to harness the most extreme moves of the market. Number 4, position sizing. Position sizing, position sizing, position sizing. You're too big, you're dead. Allocation is critical for your success. You're going to learn that in the class. Number 5, go on the offense. After we teach you the defense, we go on the offense. In extreme volatility, in place volatility spreads, VIX volatility spreads. Okay, we're going to be doing bounce and fade trades with in-out spreads. We're going to be looking for risk twist spreads. All of it's going to have detailed step-by-step entry and exit criteria. You're also going to learn to build your own spreads, all with the criteria. You're also going to use set and forget order types. Forget about managing some of them. Okay, forget about being glued to the screen. In heavy volatility, you're actually going to find good till canceled orders can be helpful. Number 8 over here, volatility spreads can be done with trading accounts. $2,000. You do have to have $2,000 to do these. Okay, the trades can be done in retirement accounts, minimal options experience, with smaller accounts looking for upside potential. Follow the recipe to build a trade. That's the curriculum. I'm actually going to show you a website here in a moment if you want to review some of the curriculum. But again, I am going to blast you for 3 hours. And I hope you guys know right now, and I like to say this, March 7th, for 3 hours, I'm going to overwhelm you. Okay? But you go back, you review it a couple times. People tell me by the second or third time, I got it. It's going to be worthwhile to you. Absolutely going to be worthwhile to you. Now, you want a bonus. Listen, here at TheoTrade, we like to differentiate ourselves. We like to take everything to the extreme. And at TheoTrade, we go beyond one class or one indicator. Like, we get it. We really do. You want everything to trade. You want everything to be able to invest. You want it at one place and you want it at one price. Here tonight, we're going to give you 2 bonuses. Bonus number 1. We're going to provide you access to over 88 trading classes. Okay? There are 88 classes right now at TheoTrade, archived. They're all available immediately on demand and on TheoTrade mobile. Okay? Which classes, when I say they're archived, these are ready to go. They're ready to go. Guide to small account with in-out spreads. Okay? Black book spreads. This is a brand new class. How to collect income being short. The next big spread. This is actually a risk twist class. Guide to selling high probability spreads. Iron condor, selling premium, minimizing risk, survive and thrive in extreme volatility. Okay? Day trading, covered calls. All right? Top 10 skills for consistency in trading, pairs trading. It just goes on. There are 88 different classes. And again, I want to reiterate, the live class, Guide to Surviving and Thriving in Extreme Volatility, is right here, March 7th, 9 a.m., 12 p.m. Central Time. We're going to give you access immediately, tonight, to over $9,000 in classes. And I'm going to tell you right now, because people go, and they go to classes at different firms, and you go to a class, and then you have to buy an indicator for the class, and then after the class, they're going to sell you something else, and then you want trade, and I got to do this, and okay, we don't do any of that. We give you access to everything we've done. Everything we've done since we launched TheoTrade. You want to learn about this stuff? This is the place to learn about this stuff. Okay? The archive, the database that we have, all of our on-demand classes is second to none in this industry. There is nothing that even comes close. Nobody gives you 88 classes. Minimum class is 3 hours long. Okay? It is spectacular amount of information comprised in clean, okay, bite-sized chunks. By the way, all of these classes, this isn't just about me. It's not, the Don Kaufman show. Here's the TheoTrade instructors. If you're unfamiliar with TheoTrade, get familiar with it. Jeff Bierman. Jeff Bierman worked with us at TD Ameritrade. He was also the chief market technician for TD Ameritrade. For those of you, if you've spent time on Thinkorswim, allow me to introduce Jeff Bierman, who's also a professor of finance at Loyola in Chicago. Jeff built over half the technical studies on the Thinkorswim platform. Analyst, trader, and former, again, chief market technician. Next in the list, Matt Williamson. He's our resident premium selling option strategist. You want to learn to sell option premium? This is your guy. Next in the list, Corey Rosenblum. He's our senior strategist. He's also a resident swing trader. Those of you short-term swing trades, that's your guy. It's Corey Rosenblum. Each one of our instructors, okay, specializes in their own genre of trade. Next on the list, Brandon Chapman. Brandon also worked with us at TD Ameritrade. In fact, Brandon literally wrote, okay, the book for the education division of TD Ameritrade. There was a time, okay, where the book there and the classes, it was $24,000 for an 18-month long class. Some people actually, I bet in here, have actually taken it. It was literally $24,000 in 18 months of your life. Brandon Chapman actually wrote the book, along with myself and a couple of other individuals. But Brandon, okay, was the key component to that. Specialty, macroeconomics, technicals, and fundamentals. Again, a class that used to cost $24,000, stuff that we have here at TheoTrade will absolutely blow it away. Next in the list, Steve Miller, 43-year veteran, stock options and futures trader. This is actually a former market maker, okay, that I happen to know is a market maker for decades, literally for decades. Okay, I've actually known Steve Miller since I'm a little kid. Next on the list, Tony Rhaegar, on NASDAQ futures. You got to have an intraday strategist. What does Tony do all day? Trades NASDAQ futures. And I got to tell you, day like today, that is Mr. Toad's wild ride. Bonus number 1 are 88 classes. Okay, all of them are yours today. Bonus number 2, all access TheoTrade VIP membership. It's free. What do? We're going to give you access to everything we do here at TheoTrade for the next 3 months. It's unlimited access. Okay, listen, there's no, nothing. You have access to everything that we are going to do, okay, from today for the next 3 months. What do we do? Like, what do we do here at TheoTrade? First of all, nobody could possibly watch everything that we do here. We have a live trading chat room. As I said, there's other education places out there, right? Really? They're going to give you access to 88 classes, okay? By what? One of our instructors here is a professor of finance at Loyola. It costs $42,000 a year to go to Loyola. Or you can come actually here, Jeff Bierman here. He actually moonlights with us here at TheoTrade. His full-time position, though, is, again, professor of finance. Actually, he's also moonlighting at DePaul University as well. Okay? We do 6 hours a day live. 6 hours a day. We literally broadcast 6 hours a day. We do real-time trades. You are watching us trade. Real-time insights and analysis. And it was crazy the last 4 days. You want to see? Go back in the archive tonight. Watch today's archive. We give you text and push notification of trade ideas, including volatility spreads. You realize all the trades that I showed you guys tonight, these are trades that we did in front, okay, of a live audience, okay? There are thousands of people that are watching. We have 5 distinct trading portfolios that you can follow. We do daily coaching sessions with all different topics here, stocks, options, and futures, and our instructors. This one is huge to me. We directly answer your trading questions via email. We don't shy away. You send us an email, we're going to give you an answer, 24 hours. Okay, we're giving you access to our chat room, giving access to our instructors. It's $997 in support, trade ideas, and insight. It's included tonight, right? Why do we do this? You can't learn to trade from going to one stinking class. I figured that out when I worked, the first couple of days in education, right? I came from the market making background. Do you think that they put me in one class and they said, Don, go be a market maker? It's ridiculous. You need somebody to hold your hand, okay? We'll give it to you for 3 months. Like, watch everything you can. We're like, how much can I watch in 3 months? Okay? Go for it, people. Stream. Download. Okay? Do what you got to do. On top of it, we're also going to give you access to 59 proprietary indicators and scans. Auto expected move, gravity points, RSI Laguerre, Quantix. I'm actually giving you Quantix. By the way, this is a cumulative tick indicator. I am giving you this indicator here in the next 5 minutes. Okay? NQ levels, next generation squeeze indicator, complex, position tracker, IV rank and percentile, TheoQuant trade setup, all right, unusual put options activity, sizzle scan, SPX expected move, and a ton more. $1,800 of indicators and scans. We give that to you. Why? Because we use it every day. Like, you're going to see my screen. It should only be right that you have the indicators that I have. So you do. We share everything. Why? Because it's the right thing to do. TheoTrade, we include everything you need to invest and trade. We give you classes, we give you coaching, we give you email access to the instructors, we give you a live trading chat room and live trades, we give you indicators, we give you scans, and we give you mobile access 24/7. We have our own mobile application specifically for iOS and Android. It is everything you are going to need to succeed in this business. The way that we built TheoTrade, okay, I modeled it after Netflix. And we talked a lot about this. There's a couple partners here at TheoTrade. And we modeled the whole thing after Netflix. I mean, TheoTrade is the Netflix for traders. Every genre you could possibly dream of. Stream, okay? You can even stream stuff back at 3 times the speed. If I'm not talking fast enough, you can listen to me even faster. Everything that we're giving you here tonight, it's $297. Everything tonight, it's $297 for 3 months. Okay? I'm going to tell you guys right now before I go any further. Okay? And I'm going to recap all of this and I'm going to give you, okay, the website. Again, go to TheoTrade.com/risk right now. Okay? That's R-I, S as in Sam, K as in kick, right? TheoTrade.com/risk. It's $297 for 3 months. And the first question everybody asks, somebody already put it in the chat room. Is this a membership? Nope. We don't do that anymore. We don't need to. $297 for 3 months. If you want to do it again after 3 months, we'll ask you. We will never charge your card again unless you give us authorization and say, I want another 3 months. Okay? What we're doing here is so good at such a good price. There are now well over 4,000 individuals here at TheoTrade. Okay? We only built the company in 2016. We have 4,000 individuals streaming. Today alone, just in the chat room at one time, we had over 2,015 individuals in our chat room today, okay, at one time. Total, we had almost the 4,000 people, but at one time we had over 2,000 people in our chat room. Okay? After 3 months, you want to do it again? Do it again. You don't? I'll still love you. It's $297 though for 3 months. It is nothing to learn this stuff. Listen, the guide to surviving and thriving in extreme volatility. It's March 7th. It's included in this. Okay? Then we give you access to over 88 trading classes. Everything, those 88 classes are available right now. By the way, we're still going to have new monthly classes. Then we have a live trading chat room. We broadcast 6 hours a day. Okay? 59 proprietary indicators, push notification, trade ideas, and 5 distinct portfolios. Then we have coaching sessions, literal coaching sessions where we say, hey, here's a new topic. Every single day we do that. Last but not least, we directly answer your trading questions via email. Again, go with me right now to theotrade.com/risk. I'm going to make this even easier for you. TheoTrade, we make it a riskless trade. Everything you need to start trading, from absolute novice to expert. We're going to put a money back guarantee on it. Trade with us over the next 3 months. If you're not completely satisfied, just email us, support@theotrade.com. You have to provide us the details of your trades and you receive a full refund. Basically, we're not putting any huge stipulations on this. I'm going to show you the stipulations right now, okay? Because I like to be really transparent with what these stipulations are. Stipulations are this. In 3 months, you have to do 10 trades. We're going to do more than 10 trades in 3 months. Your initial account value must exceed $2,000, okay? You must follow our criteria, not your own made up garbage. And, I used a little bit of this with a Fibonacci and some cheese. Okay. I don't want that. And you have to actually provide real account statements. This ain't paper trading, people. Okay. I'm willing to put our money where our mouth is. It's only $297. We don't care. Listen, after 3 months, if you're not totally satisfied, what's satisfied? Be satisfied. Like you feel warm and fuzzy. You feel that for 3 months, okay, this was it. Like the amount of value you're going to get in the next 3 months, you're going to be absolutely blown away. But you do 10 trades, you're not happy? It's okay. We'll give you your $297 back. I'm telling you right now, listen, get into TheoTrade now. We're going to work with you directly. There is one big stipulation. 30 spots are on the TheoTrade riskless deal. Why do we do that? Because I have to actually go through and look at your account statements. I have to go through and actually reconcile all the account statements, look at your trades. 30 people, each one of these people doing 10 trades, that's 300 trades I have to look through, okay? We give you 30 spots on the riskless trade deal. It's first come, first serve. It includes, again, unlimited email mentoring, send us your trades, $297, never been available before. That's why we do this stuff, people, okay? So it is completely riskless for you. Listen, what our members are saying. Thanks, Don. Just finished my very first ever quarterly trading report, and I grossed 21% return on investment. Thanks for the help. Looking forward to your intraday course tomorrow morning. Okay? Just want to let you know I appreciate him and what he does for us. First time ever, my account's in the green. Okay? Fantastic service. I became self-directed with my trading through the education I got here. All right? Thanks, TheoTrade. I'm up $4,000 this week. Again, get access today. everything. It's $297. This literally goes through everything. I want to take you over and directly over to the site. Again, the bonuses, all right, the chat room, the 88 classes, the push notifications, the trading indicators, the daily coaching sessions, it is all part of TheoTrade. There is nothing that we do at TheoTrade that we don't provide to you, okay, here for $297. And again, the live class is coming up March 7th, but you can hop in. You're starting to do this tonight, tomorrow morning. Hop in the chat room. I'll be there in the morning. Listen, follow me right now to theotrade.com / and again, that's a / RI, S as in Sam, K. Follow me to this link for the cumulative ticks and quad indicator. I'm actually going to take you guys directly over to the link. Then I'm going to answer some questions for you. Okay. By the way, here's the link. And then I'm actually going to show you what TheoTrade looks like here for a moment. And again, I want to throw the address up there for those of you that are tuning in over here. theotrade.com / risk. All right, theotrade.com / risk. First of all, okay, you need to email us, support@theotrade.com. This is also our phone number, but you don't even have to call us right now if you want to chat. Stacy's actually available to chat. Jeff's available to chat. JP's available to chat. That's what we're here to do, okay, to help. All right. Guide to surviving and thriving in extreme volatility. There are 30 riskless spots right now. Okay. All you have to do, come over here, you click add to cart. Okay. Go right over here to add to cart. It'll actually detail everything that's included in here. All right. There's a lot of people going here apparently right now. That's why it took a second to pop up over here. Everything available in here. Go right through, fill it out. Okay. Payment information. I want to reiterate again, the reason I'm bringing this up. Okay. This is not a membership. This is not a membership. We are never going to bill you again. It's $297. If you want to do it again after the 3 months, it's $297 after that 3 months. Okay? That's why I take you through this. Now, for those of you looking for the cumulative tick indicator, go to theotrade.com / risk, scroll with me, and it'll detail everything that's involved, okay, at TheoTrade. Scroll right with me. It's the download. It's the Quantic indicator for Thinkorswim. Okay. It's right there towards the bottom of the screen. All right. Add to cart. For those of you that have questions on here, I'm going to answer all of your questions right now. And again, I just want to throw up the theotrade.com / risk. Okay. Before I go any further, before I even answer questions, I want to show you what TheoTrade looks like. Okay. This is TheoTrade. This is actually where we broadcast. This is actually a TV screen in here. Down below, okay, it's the, this is the chat room. The people are chatting in it right now. We don't shut it down at night. You want to come in there? Sign up right now. You get your password within about 10 to 15 minutes. You can go in the chat room and start talking to people. Okay? Chris over here, I see him. That's, I see a little kangaroo. It's because he's from Australia. All right? He's an Aussie. By the way, people are actually talking about what we're doing right now. Right? Kind of scroll back. There are literally, okay, thousands of people in there every day. So that's actually where we broadcast. Next, let's say you're brand new to this. You have no idea what to do. See this little thing right here? It says start here. You know what start here means? Okay, it means you're an absolute novice. There's one thing I often challenge on TheoTrade. We'll take you from the absolute novice to the most extreme. As I said, okay, we have one individual who's a professor of finance, okay, at a leading financial university. We will take you from the absolute basics to the most extreme side of trading, okay? But this is where you start. If you've never had experience, options 101, options 201, they're in small bite-sized chunks, options 301, order execution, preparing for your trading, day, what products to watch and why. That's a 3-part session. It's actually one of my favorite. But that's where you start if you've had no experience. Then you want to know, like, hey, I want to see these 88 classes you got. Where are those 88 classes? You want to see the classes? I got classes. This is the TheoTrade class archive. First of all, classes are broken down to genre of trade. Option strategies, option newbies, technical analysis, day trading, stock trading, futures trading, hedging. As I said, we've built the Netflix, pairs trading, mindset and trading. Mindset's important, all right? This is for people that are like, you get inside your own head, you're in trouble. Look at option classes. You want to see some of the option classes? Because here we go. I'm actually going to dig into the option classes right now. Sell premium, minimize risk. The next big short. This is the risk twist spread, right? Guide to butterflies and weekly returns. Option Greeks. trading options and ETFs, tetrapod spreads. Okay, this is the VIX volatility spread course, duration iron condors. I'm telling you, okay, you name a topic in a genre of trading, it's here. By the way, if you can't find something at TheoTrade, right, you can actually search for any topic you want in here, all right? You want to learn about like vol futures, volume weighted, volatility survival, okay? I mean, you name it, just click search, okay? There will be a topic over here. Volatility survival guide, it just goes on and on and on. How much we have in here, staggering. Again, if you want to see what a class really looks like, okay, this is actually a class that we just did recently, okay? Here's the Black Book Spreads class. You click on the class, it's playing, okay? That's it. You can actually maximize it. This is a Matt Williamson class that we just did recently. You can download the slide deck. It was February 6th. Well, when's the next class? March 7th. Why do we do that? It's once a month. Once a month, we got a class coming here. Again, you want to cruise right over here, and now I'm going to answer all the questions I possibly can. Listen, TheoTrade.com/risk. Okay, the class I'm doing here on March 7th, it details, okay, some very specific classes, but goes much further. It's all about surviving and thriving in extreme volatility. Again, I'm going to cruise over, answer a couple of your questions right now, okay? Follow with me here, okay? Again, I put the web address right at the bottom, TheoTrade.com/risk. Questions. These are general questions. Then we're going to come to specific questions. So hang with me here because I think some of this is really, really important. One of the ones, somebody just asked right now, can I do a risk twist spread in an IRA? Hal asked that. Yes, absolutely. I just did, okay? I'll come back to that and the rest of the questions in a second. Listen, what do you need to get started? Everybody always asks that. I think you need a laptop and an internet connection. However, you could actually do an iPad or an Android tablet now. They're that good. You can trade off of it. I trade off of my phone and my iPad all the time. We have everything you need to get started from absolute novice to the most extreme. And I always reiterate that maybe you have some experience in here. Okay, good. We're there for you. Okay. Number 2, getting through this is not a membership. We're not going to auto renew or bill you again, period. Number 3, we archive everything. I understand that you can't watch live trading throughout the day. Some people have jobs, okay? You can download it onto your mobile device or stream it on your mobile device, and you can play it back at faster speeds. So we actually have archives that you can go faster or slower in. So you could technically watch a 3-hour course in an hour and a half. All right. Number 4, we will provide you access to TheoTrade Mobile. You can download it at your leisure. Number 5, okay, you can email us anytime and receive a response within 24 hours, including trade-related questions. We don't shy away from that. I spent 15 years in the brokerage business. Jeff Bierman spent, 12 years in the brokerage business. We know the rules. There's no why people always say I can't answer trade questions. Yes, you can. You just choose not to because you don't know the answer. We answer trade-related questions. Bring it. Okay? We're going to leave you hanging? Of course not. We're going to answer your trade-related questions. Number 6. Okay? You'll gain access to every course TheoTrade has done in the previous 4 years. It's classes, it's coaching, it's live trading sessions. The archives are searchable. Name a trading topic, and we've got an archive on it. All right? Number 7, all of these trades can be done inside of an IRA. That's actually why I wanted to detail Hal's question there. All the trades can be done inside of an IRA retirement account with as little as $2,000 within the account. Okay? Number 8, at TheoTrade, we can help you get approved for options trading at several major broker-dealers. Okay, we have relationships at TD Ameritrade. We got relationships, of course, at Tasty. We got relationships at E-Trade. You name a brokerage firm, we got relationships, right? Number 9, there are 30 riskless trade spots left. In fact, there's not that many because I'm watching people enroll as we speak over here, all right? I'm telling you guys, get results, right? This is the time to make money in this business. This is the time. Get results, take action, enroll for TheoTrade. There's no risk to you. The first 30 people that enroll, there's absolutely no risk. You don't like us after 30 days or 3 months, that's fine. It's $297. Nothing. Go to TheoTrade.com/risk. Now, a couple of more questions that I am going to answer. By the way, I want to thank Diego M. from Florida, Mohammed D. from Pennsylvania, George W. from Ontario, Tony J. from Georgia, Hal R. from New Jersey, Dennis J. from New Hampshire, Ray H. from Virginia, Thomas O. from Florida, Aaron R. from Ohio, Y. Key from New Jersey, Simone S. from Florida, looks like Peter S. from Florida, Carl J. from Michigan, Ronnie A. from Alabama. Nice. Got a couple of instructors from Alabama. Edith F. from Washington. Thank you guys for enrolling. I think that's about 12, 15 people, and there's more enrolling right now. I'm just giving everybody a heads up on the numbers. Let me go back to the questions. Okay. If you're enrolling right now, fantastic. If you have questions, we're in the chat room right now trying to answer them feverishly. Okay. By the way, there was a question. Somebody said, how do I read the Quantic indicator? You're going to say, I do it every single day. I use Quantix every single day. I love that thing. Like Quantix, I'm a very big quantitative. It basically means I'm into mathematics, right? So I wanted something that worked on a chart, but that will also be visual for you. Like I look at a lot of numbers and so forth, and that's why I like Quantix so much. I think you guys really appreciate that. Okay. So let me go back to these questions. This is actually, I appreciate Jamie came in and said, closed my SPY RTS today, 500%. Okay. This is big. This is a big day. Okay. What delta do you place each part of the debit spread? Paul, that's exactly what the criteria. Paul, I'm going to tell you right now, Paul, you'll see exactly the delta. Okay. In fact, when it comes to the risk twist spread, specifically the risk twist spread, delta is everything in placing the risk twist spread. All right. Somebody said, isn't it too late for volatility spread since we've already moved so much? Okay, cost will be high. So Brenda, certain trades, okay, are going to work when the volatility is extremely high. Certain trades are going to work when the volatility is extremely low. You can have, okay, equivalent profitability on both sides of the spectrum. So 3 weeks ago, we had no volatility whatsoever. So I bought up all these volatility trades and I absolutely cracked it out of the park, right? I was a buyer of volatility. What you're going to find in the next couple of days, you're going to see me step in now and start to sell volatility, which I didn't want to cover tonight. But believe me, we'll be covering that at TheoTrade. We're always, okay, we're on the bleeding edge of what's going on in the marketplace. And anytime anybody says to you like, oh, this is the one strategy for all markets, there is no one strategy for all markets. Okay. We're going to have a couple of tools and you're going to follow me into some of those tools. When you're new to it, that's fine. Okay. We'll be able to answer some questions for you as you guys are learning, okay, about these particular strategies. All right, let's go on. A couple more questions here I want to get through. All right. So Michael was saying, how many contracts did I buy or sell? So my contract size, Michael, varies vastly. It's actually allocations in dollars and cents. My comfortable allocation on a strategy by strategy basis, I usually do about a $500 allocation. Okay, for like in-out spreads, I go $500, $500, $500, $500. When I do a risk twist spread, I'll do $500 like of an allocation, which means I might be doing like 3 or 4 units of a risk twist spread, but then I may have 6 or 7 different risk twist spreads on. And that's how I'm actually, starting to hit it out of the park on a few of the trading days this week. But this week, let's be forthright. This was the extreme. This is the extreme. And I'm telling you though, okay, if you think this is extreme, what happened the last 4 days is not going away. We will get calm and we will get volatile again and we will get more volatile and we will get horrible. Okay. Pandora is out of the box at this point. Okay. And it's pretty much every, man, woman, and child for themselves. I'm telling you, you have got to pay attention at this point. All right. So volatility will go down eventually. What kind of RTS can I use for a decline in the VIX? So yeah, Jackson was actually asking this question. That's actually, Jackson, where we're going to sell premium. In fact, we've got an entire specific course on selling premium in and around that high volatility. And you're exactly right. Now the volatility is cracked wide open. It's going to ebb and flow. So we're going to go in, we're going to sell volatility, then we're going to buy it again and sell it. This is where things, they get fun. Okay, really fun from here. So let me see if I get another one. Paul was saying, so you don't sell option premium? No, Paul, I absolutely sell options premium. In fact, I grew up selling options premium. I grew up selling. When I say grow up, I'm all grown up. I started trading at 22. In the first 15 years of my career, I did nothing but sell options premium. Okay. I pulled out of selling options premium in 2015. I noticed a distinct change in the marketplace. Since 2015, I've really backed away. I have sold some premium, but I've backed away since 2015 from selling options premium. And it was after August in 2015 where I noticed, okay, a vast change in market and market structure. We're right now, today, we're on the cusp, like the edge of where it's going to be good to sell premium again. So, Paula, hopefully that answers some of your question. All right, I think I got most of these questions. There's another one that just came in. Your auto expected move already saved me a world of pain. Thank you, Aaron. Okay. By the way, if you guys have never seen that before, I talk about like auto expected move and expected moves all the time. These are indicators that are just critical. Okay. Every single week I detail about expected moves over here. Okay, for those of you that speak geek, this is a 7 standard deviation move right now. 7 standard deviations. Okay, now, I've never seen 7 standard deviations, not even 2008. It's that unexpected, people. All right, we are in the extreme. Listen, what our members are saying. By the way, you guys are rocking it. Very impressed. It's really refreshing to have you guys putting this together and sharing knowledge and not upselling everything and burning your customer base. You've got a customer for me in life because of this approach, and I'm sure I'm not the only one. I like to pull up that particular quote over here because I want you guys to know it's $297. We want you people to learn this business. That's what we are here for. Okay. I like this one too. I'm very impressed with TheoTrade. I've studied under stock coaches, various trading intellects and strategy intellects and different trading plans. I have not come across anything as good as what I'm seeing here. The people at TheoTrade are very helpful and extremely knowledgeable. I'm looking forward to this association for years to come. All right. A couple more over here. The in-out spreads have been very helpful. I've been able to get on a hot streak, double my small account in 4 months. Okay. Thanks heaps. Your explanation is very clear. So impressed that I received a response, okay, that was so comprehensive. Usually that doesn't happen. I've asked lots of questions online and rarely get a response. We like to answer emails here. Right? All right. The archives of TheoTrade are a godsend. You can stop the tapes, reverse the tapes, make notes, use the information. Again, we're trying to build the Netflix of trading here, people. Again, go right now. It's theotrade.com/risk. I'm going to grab a couple more questions inside of the chat room over here. Oh, a couple more people I'd like to thank. Kyle J. from Minnesota, Peter G. from California, Stephen G. from Ohio. Thank you guys very much for joining us this evening, all of you. Those of you that have now enrolled for TheoTrade, you can hop in as soon as tonight and start watching some of the archives and walking through. You can shoot us emails. Okay, tomorrow morning we will start promptly tomorrow morning. Okay, at the cash open of the market, we actually start broadcasting at the cash open. I myself am going to be on 30 minutes after the cash open. You're going to start tomorrow morning with Tony Rago. Again, you're going to start with Tony Rago. I'll be on. Okay, specifically, if you're on Eastern time, I'll be on starting 10 a.m. Eastern time. I'll do about an hour. I'm on that chat room every single day with the rest of our instructors. Thanks, everybody, again for joining us tonight. Have a wonderful evening. Bye-bye.